In today's video, we're going to take a look at the 120-minute chart in the S&P futures. And I also want to show you how we use timing during the trading day, because I did start to do intraday timing. And what we had today was, after projecting from this last high for the next possible low, these are the bars that showed up. And I always look at plus or minus a bar as far as looking for, a change to occur or, a low to be put in place. Okay, so besides the timing factors that we had to anticipate a possible low, we also had key price support at the 30.18, 30.20 area. So that zone hit and held, and we basically, retested it a couple times. But let me show you what you can use as far as entries for a test of a zone like that. A lot of my traders are using a 377 tick chart in the S&P. So here was the first time that we had tested and held that zone. Here's your first buy signal there. It didn't last that long, but as we retested, there was another buy signal. So that's pretty much the way you use it. It's setup plus trigger equals trade entry, and then you manage it. And then let's look at the next decision, because if this is a more important low, which, I don't know for sure, but if it is, your typical target's going to be the 1272 extension or this 3064 area. But for quite a few reasons, like time and price resistance that I'm looking at, on the daily charts, I still want you to watch for possible failure. Now, you don't really see everything here on this 120-minute chart. You see the 786 retracement that overlaps the 618, 30, 40, 41. This is what it looks like on the 30-minute chart. Okay, so here you do have those same two retracements, but you also have an extension of the high to the low that overlaps this area. So three price relationships here. That would be one place to watch for a possible failure. But know that if we start to push through this resistance instead, then the odds increase for a continued rally towards the upside target that we would be looking for off of this last low.